Well, joining me now to discuss the latest developments surrounding digital currencies is Alex Tapscott. Alex is the co-founder of the Blockchain Research Institute and contributed to the book Financial Services Revolution. Alex, thank you for joining us.
Thank you.
So for people who are new to this space, explain how a digital currency would work and how it relates to current systems of things like cash, checks, and credit cards.
Yeah, so a central bank digital currency is a native form of digital money. So the system that we have today is we have banknotes and coinage and other forms of physical currency, but the vast majority of money exists as balances inside of financial institutions. And so as a result, the currency issuer, the government, has to rely on the banking system in order to manage the monetary policy and the money supply. A central bank digital currency is different. It is a digital asset, a bearer instrument, so in other words, if you hold it, you are the owner of that asset, that the central bank has 100% control over the issuance of. And it allows for some benefits. Individuals can make peer-to-peer payments more easily. The government can reach more people who are unbanked. And in addition to that, in times of crisis, such as during the pandemic we just experienced, it makes it easier to do monetary policy. So if you wanted to put money into people's hands right away to kickstart the economy or allow them to pay for essential services in a crisis, you can do that more easily. So the promise of a central bank digital currency is that it can improve the current system in all of those different ways.
Now, a lot of people are wondering what this means for cryptocurrencies like Bitcoin. So break down the main differences between a digital currency and a cryptocurrency and why the distinctions are so important.
Well, they couldn't be more different, quite honestly. Bitcoin, as the segment earlier pointed out, was designed to be permissionless, so meaning you don't need to have an ID with the government or a bank to use it. It was meant to be peer-to-peer, so you can transact without the need for an intermediary like a government or a bank. And it was meant to be private, so enabling people to make transactions without other people necessarily knowing about it. And there's lots of really important use cases for all of those different features. A central bank digital currency is something that frankly is to be decided what it looks like, and really it all comes down to the design features. So in China, the DCEP, the central bank digital currency, is designed with all of those different features in mind that I just mentioned. But also, of course, the government would like to know, as you pointed out, how people are spending their money as a way to crack down on crime, but also maybe to keep a closer eye on people's behavior. In the United States and other democracies, the decision as to whether or not the central bank should have total control or insight into payments is still one that's to be decided, and I think that this Federal Reserve paper should shine some light on it.
So then talk a little bit about the progress, how far along China is, and what its success could mean for China's role in global financial markets.
Yeah, well, I think this is one of the main reasons that China is interested, is that for 75, 80 years, the US dollar has been the dominant currency for global trade. Now, when that system was created after the Second World War, it made sense. The US economy was the largest in the world. It was also, I think, more than half of the global economy at the time. And so the fact that dollars were used in global trade seemed quite logical. Today, the US economy is around 15% of the global economy, and yet the US dollar is as powerful and as important to global trade, I think, as it ever has been. So China is an emerging superpower, and it would like to exert its own regime on the world, its own monetary regime on the world. And I think they think of the central bank digital currency as one way to do that. And as you pointed out earlier, they're testing out ways to integrate this not just within China to improve the metabolism of commerce, but also with key trading partners and other countries that they do business with, including along the Belt and Road Initiative, which obviously is something that's very strategic to the country in the long term.
And as you mentioned, other governments are also trying this approach with digital currency with their central banks. Where do some of these other regions, whether it's Asia, Africa, Europe, where do the other regions stand?
Well, I think at this point, it's easy to overstate the progress. I'd say probably with the exception of China, very few of the major monetary regimes or currency issuers are thinking that hard about that. I mean, to me, the most important ones would be the United States, the European Central Bank, and perhaps the Bank of Japan. Beyond that, initiatives that are looking to digitize their currencies, I think, are interesting, but are not particularly important from a global perspective. So I'd be looking at those areas, those countries and jurisdictions for any signs of future development.
All right, great having you on. Alex Tapscott there, the co-founder of the Blockchain Research Institute.